There's a positive development for the Indian steel players that has come in. India has now imposed a 12% of a safeguard duty on steel imports. The duty has been the talk of the space since last year, and the 12% number was first recommended in March of this year. Mika brings in the details on the space.
So we have seen the latest development, which was a key overhang on the steel counters. The government has imposed a 12% temporary tariff or safeguard duty on some steel imports, and this is to be effective for a period of 200 days starting today. In terms of what it has an impact and what kind of products we are imposing the duties on. You have hot rolled coils, you have hot rolled plates, you have cold rolled plates, metallic coated coils as well as color coated coils, and there's a certain threshold. The safeguard duty will only be applied to these following products if the import price stands below the threshold. This ranges from anywhere between $675 per MT to over $800 per MT, depending on the products that are given. In terms of the impact of the 12% safeguard duty, one, it helps with better steel prices. The safeguard duty will help could help increase domestic steel prices. However, it's key to be noted that currently domestic steel prices are at an 18% premium to the import prices, and the duties could help lower this premium to around 5% as per Morgan Stanley. And this is a positive development for Indian steel companies, and it's positive for the EBITDA of the steel companies. Analysts had noted a 7 to 15% EBITDA gain for steel companies when the duty was first recommended in March of 2025, and we saw multiple EBITDA upgrades in that month. And lastly, in terms of how the industry has reacted, well, JSPL's Naveen Jindal has stated that they welcome the government's decisive move to impose a 12% safeguard duty on certain steel products, and this is an important step in not only to protect Indian manufacturers from unfair trade practices but also boost domestic production.
Okay, thank you, Mika, for all those details. Certainly a positive that we are seeing for the steel sector. So a lot of metal names would be in focus, so focus should be on the Nifty Metal Index as well. But a couple of earnings on the radar, and we have Varsha joining with our list. Hi, morning, Varsha. What are you picking up?
Good morning. Let me start with Himadri Specialty Chemicals, wherein the growth that you are seeing is on the back of value-added products. So let's see what the numbers are. Though there was downtick in revenue, which was the revenue was down almost 3.6%. Now this was led by a lower or degrowth in sales volume. So sales volume decreased 3% year on year, and because of that you are seeing downtick in revenue. But if you see the EBITDA margin, so EBITDA is up 30% while margin is at almost 21% versus 15% last year, and this is on the back of company venturing or adding or expanding into more value-added products, which is leading this uptick in EBITDA margin. Net profit growth, if you see, is led by uptick in EBITDA. If I want to talk about the capex for the company, so they are doing capex when it comes to specialty carbon black expansion. There's a brownfield expansion going on for new specialty carbon black line of 70,000 metric tons per annum, and this will increase their total specialty carbon black capacity to 130,000 metric tons per annum, and which will be operational by Q3 FY26. So basically, company is doubling up the capacity expansion, and company will also set up unit to extract higher value added specialty products. Then on my list is Pitti Engineering. Good set of numbers. If you see, revenue was up 40%. Now this is on the back of sales volume, which increased almost 51% on year basis, but the EBITDA was up 54%, good uptick in margin at 17%, but the net profit is down 22%. Now this was due to lower other income and also in interest cost, which is up 35%, which has impacted net profit. Lastly on my list is Anantraj. Good set of numbers. Revenue is up 22%. You see EBITDA is up almost 36%. Margins, good uptick in margins at 26% versus 23% last year, and this is the reason why you're seeing net profit, which is up almost 52%.